Hi, welcome to TV, where we discuss issues, trends, and our trends around us, around the globe, from all over the world. My name is Nathaniel Oluwatomi Amida, and today with me are two beautiful, wonderful guests, Vandana Tolani and Dr. Mansa, if I got that right. But they have an opportunity to introduce themselves either ways. And today we'll be discussing the successes and failures in fundraising. Yes, Dr. Maren Schweizer. So before I go ahead, Dr. Maren, would you mind introducing yourself to the audience? Let them know your background and where you're joining us from.
Hello to everybody. Thanks for having me on the show. My name is Maren. I'm based in Singapore. I'm spearheading the growth capital arm of Schweizer. We are investing in digital ecosystems in Southeast Asia. To give you a little glance, we've been doing 30 plus deals in the last 4 years. Our business is a dinosaur. So you might wonder, what is a dinosaur? It's just an old business. It's 171 years old. That's why I like to call it dinosaur. I sometimes get actually the feedback that dinosaurs are not around us anymore. That's correct, but we've proven by innovation that we embrace change and reconfigured our businesses over now, we could call it nearly 2 centuries. Happy to be here and share both ways, both from the entrepreneur, founder perspective, as well as from the investor's perspective. What are do's and don'ts and pitfalls to avoid in fundraising?
Sure. Awesome. I'll take you on that dinosaur comment where the show starts, and I hope to get more insight from you about that. Anna, please introduce yourself to the audience. Let them know a little bit about you and where you're calling us from.
Yeah, firstly, thank you, LATOKEN TV and Nathan for having me here on the show. It's a very interesting topic that we are speaking today on success and failures of fundraising. And I'm absolutely glad to see Dr. Marin, and sharing a panel with her is absolutely an honor. I am I was in Singapore in Jakarta for 15 years in investment banking. I had my own family office fund there. And this is my seventh year back in India. I did some investments, then I went back to advisory. Currently, I'm connected with 300 investors globally, and we do global deals. We are sector agnostic. Typically, we do $1 million to $25 million. Please feel free to reach out to us via LinkedIn or via our website, www.convanto.com. And once again, thank you
Awesome.
for having me.
Thank you very much. And thank you very much to our audience. If you're joining us live, we're live on Facebook, we're live on Twitter, and LinkedIn, and also on YouTube. And I also welcome our guests joining us live to be part of the show. Make a comment in whatever social media you're watching us from. Pass a question across to us. I'll be here to give feedback, and the guests will give you feedback in real time. And yes, an opportunity for startups looking to expose their projects or their businesses can also reach out to the LATOKEN VCTV team to arrange a pitching session where you get to pitch live your project to our panel. And you never know the attention you might get. So pick up your pen or email and send us a mail, and we'll get back to you. So right now, while I'm expecting more comments from our viewers like Wasu watching us on Facebook, um, I just want to jump straight into today's topic. Fundraising in recent decades has been mainly linked to raising capital or funding for startups, projects, or companies. Now, fundraising in this investment space has undergone a lot of changes and evolution. Now, being successful in fundraising these days is basically an art, and we want to learn from our panelists the art of investing. So I'd like to start from Dr. Maren. Yeah. So I'd like to know from you, Dr. Maren, what are the key factors responsible for either the successes or failures in fundraising?
Let me take it into two views and two lenses. So one is the lens of the investor community. We are a family office in Growth Capital Arm. We are doing our own deals. We are doing a lot of syndicates, and we also join funds. So from our perspective, and let me start with this one first, we are also a sector agnostic. So we are investing into electronics, mobility, and digital ecosystems. So I think this is for successful investing from the investor's perspective, it's actually important to keep your focus. We have to focus on our verticals where we also have talents on board who know what they are talking about. And that's making it a lot easier for our future portfolio companies, for the founders and entrepreneurs, because they have somebody who understands the business and who's not asking a lot of kind of questions you would assume somebody from the industry knows. And this is actually kickstarting a good communication. That's the grounds of it. Secondly, we need to be very structured. That's what we do. We don't only talk digital, we are fully digital in our deal flow management. The backbone is an investor committee. It's a set fixed group of talents who review on a bi-weekly basis the deals that are coming in, and we then move them from stage to stage. There's always one contact window. It's not any assistant or a chatbot, not at all. It's one of the global investment committee members who is the sponsor and the contact window for each startup. Furthermore, I would want to mention that as we focus on verticals where we have our old businesses too, we take our lens from entrepreneurs ourselves. So we know the struggles. All of everybody in the Global Investor Committee had their own startup experiences, founded a couple of companies, co-founded a couple of companies, has been involved in M&A activities. Everybody of us is also mentoring startups outside the investment side. So I would say we are very linked and have a close contact and understanding. So that's from the investor's perspective. Maybe in my next round, I'll talk about key success factors for startups. So from the other side around.
Yes, you could easily go ahead with that before Vandana takes over.
Okay, for startups. There is one very important thing. There is only one truth. Only one truth. So what we experience, not so often, but quite frequently, depending on the stages, is we sometimes get the same investment proposal with different pitch decks, with different narratives. So my advice for all startups would be, before you go fundraising, get your things sorted out with your team. Because that's the second thing that happens often. You talk to one founder, you have story A, you talk to the other founder, you have story A plus, and then maybe you talk to the team, then you have story B. And maybe if you talk to other investors, you have story C. And that's actually the topic we are spending a lot of time double checking the business case, double checking if there's the same narrative, the same understanding, and more importantly, if the team of the startup is aligned. It doesn't help if there's one very charismatic founder that knows how to present, how to tell the story. That's a prerequisite. You need to be able to tell your story. But if there then is a team in the background who kind of doesn't agree, if there isn't a buy-in of the team, because to be successful, it's a team play. So that's where we are focusing on. This would be my advice to all startups out there. Take some time to get that sorted out with your team, get aligned, and then prepare one narrative and stick to it. Don't adopt it, even though you might feel like, yeah, we should probably at a later stage adopt our business plan, our business case, our value proposition. If so, also communicate it openly to all your investors. You can always say we piloted it, we have a proof of concept ready now, we are going to pivot our business case, here's the new one. And then there is the new one, and then stick to it. The flaky kind of things is not what we are looking for, and it's not to the advantage of any startup. I know it's easy said, difficult to do if you are under funding pressure, but spend some time on that.
Thank you very much. Thank you very much. And you're pretty right there. It's important for the teams to always be aligned and to work together in order to get their story straight and to get the team in one accord. Vandana, what's your thoughts? What do you think key factors responsible for the success or failures in fundraising?
I feel there are a few basic things which are really, really important. For instance, having a good pitch deck made by a professional is really, really important for the startup, because many startup founders don't know how to make their pitch deck in the right manner. Uh, Having a video pitch deck is an added advantage, because uh, the investor is able to look at a short video where you are pitching to all the investors, and it helps you to get great investments. So I think that is really important. Having a CFO and advisor in your team is really important to have, because many startup founders, they don't realize the value of having a CFO and an advisor in their firm. Having a complementary team, having a good team in the operations, having a good marketing team, having a good finance team, that helps the startup drive really well. Not only that, whether the startup is how much revenue the startup is able to generate. Is it tech savvy or no? Is it have they taken good mentorship from great people? Do they have the right kind of investment bankers who have the right kind of relationships with the investors? Are they even reaching to the right kind of investors? Many people, they don't know how to reach to the right kind of investors. They don't look at the websites of the funds. If it's a food startup, it has to reach to a food investor, and not a tech investor. So I think all these factors lead to the success of a company. And many startups, they put in their valuation way before time, and they box themselves up before the before the investor. I think they should not do that, because if they box themselves by giving a fixed valuation, they are definitely not leaving any room for negotiation. Hence, they will fail. So I always tell all the startups not to box themselves up and not be rigid about the valuations and not propose it way before time. Let things work, and let the investors also propose what valuation they are ready to give in, and then negotiate. That way, they will easily be able to get investments. The other reason why they fail is because they take the money from the investors for burning it up. Like in one of the previous shows, Gary had mentioned that one of the startup founders used the money to buy a car. I have had experience in one of the startup founders used it to treat cancer. So the investors' money is also their hard-earned money, and they are investing in the company because they see scope in the founder. They see a drive in the company. They see a drive in the technology, and they feel that it is something disruptive. It's not for burning it up. So I think that education needs to be imparted. uh, I feel these are some of the basic things that leads to a success and failure of a startup. And also, sustaining and scaling is very important. if they don't, if they are able to sustain, but they are not able to scale it up, once they keep sustaining it, they'll definitely be able to scale up. That way, they will have more focus on bootstrapping their startup as well, rather than just relying on the investments. So I think these are some of the factors, the key factors that leads to a success and failure of a startup.
Thank you very much, Vandana. I mean, you've mentioned a couple of stuff that many founders do not consider when fundraising, for example. And sometimes it might seem too much for them to handle. Is there any professional, or are there professionals out there, or is there a way for them to get professional guidance in the process of fundraising?
Yes, yes, they can get a lot of mentors. Our investment bank is an advisor, so gives advisory services, gives mentoring services, gives lot of other services. So I think a startup should always have a good mentor that will help them guide, also help them and guide them in the right manner. If they have an in-house CFO, they will be able to manage their money well. They will not burn the money. If they are not able to manage their money, they should hand it over to the CFO in the company who can manage their money well and do that part for them. So there are always ways out as to how you can do things. See, I may be good at financials. I may not be good at operations. Somebody could be good in operations. They might not be good in marketing. So each and every person has their own skill set, and a complementary skill set in a company leads the company way up, to become a unicorn. And otherwise, naturally, we are not doing something in the right manner.
Thank you very much, Vandana. Like you said, it's important for every company or startup to have a mentor, advisor, or something in that scope to guide them through the process of fundraising in order to avoid the pitfalls and the mistakes. Thank you very much for that, Vandana. Dr. Marin, you said something earlier on about dinosaurs. I mean, the fundraising space being a dinosaur. In other words, it's been around for a very, very long time. Now, in the over 100 years you mentioned earlier, can you give us a brief about the evolution of fundraising? I can give you it from my own part of the world, but tell me your experience of how far fundraising has come and where you see it going into the future.
It's been evolving over the years. Doesn't make too much sense to go back 171 years. At that time, it was equity, your own money of your co-founders, and that's it. And then you had to slowly grow with your own cash flows. Pretty simple. No access to gross capital. Then later, it got a little softer. Our family business, the electronics arm, then did 2 IPOs. One in 1989 in Germany and in 1991 in Singapore, at the Frankfurt, Stuttgart, and the Singapore Stock Exchange. That move actually was to get access to capital to then grow the company, both technologically, regionally, and in top line, and for sure then bottom line. Today, I would say that money is purely a commodity. It's a commodity. It is no differentiator at all. Not anymore. There are a lot of funds out there. Even during COVID, statistics show that there's a lot of venture capital out there. It has been one of the best quarters, the last ones, for venture capital and private equity injections into startups. So I would like to comment on what Vandana said before, the pitch deck. I think this is a very crucial topic. And it's so difficult for startups to get the pitch deck right. I like to call it info memorandum. An info memorandum actually needs to include everything. There needs to be an executive summary, because a lot of investment committees, they just don't have the time to thoroughly read through a 50, 60-page info memo. So the essential needs to be in the executive summary. You need to be linked to market developments, total available markets, addressable markets. You should show your competitors or peer groups, have thought about your SWOT analysis of your own firm. Don't only show the kind of shiny things. It's also good to show weaknesses and threats, because that's how it is out there in the markets. There should be something with focus. You cannot do everything. We are seeing a lot of pitch decks or presentations. Yeah, we can conquer the world. That's not the message you should give to an investment committee, because, you know, always think the investment committee is seeing a lot of info memos, a lot of pitch decks. Most investment committees have a background in corporates or in finance, so they will also look actually at your rationale and try to find inconsistencies in everything. And lastly, yes, even if you are early stage startup, you need to have a financial projection, not only a P&L. It needs to be derived to cash flow projections, because cash is king. Anything else is just an opinion. Because from cash flow, you can grow your business. You need to have your answer on what working capital requirements does your business have? How do you finance growth? Or is maybe growth killing you on the working capital because you cannot afford your cash-to-cash cycle? All these questions are important to have an answer firsthand in one deck. That's the info memo. And therefore, and I fully agree with Vandana, get an advisor on board, a mentor. Talents, people out in the market who did that all their life, who have the experience, who can quickly build a financial model for you. So don't worry. The financial model is not rocket science if you've done it a couple of times. But if you haven't, it might just feel like a great hurdle you don't know how to tackle. There are advisors out there, there are accelerators, there are government accelerators. I'm in the German accelerator program as a mentor. So it's actually for German startups to help them grow in Singapore and Southeast Asia. So it's an outside inbound. It's seasoned mentors who are there. There are professional firms who are doing that. They can serve as a venture builder. Many family offices are actually venture builders without saying it, because they have their own operational business. Those who are running the family offices have been in the operational business, and they can serve as a mentor, guide you, and prepare that pitch with you. And during the pitch, and I'm also talking a lot, try to stay crisp and short. Why our company and why now? That's one slide. And anything else, leave it to the seasoned investors. The better your info memo is, the earlier you send it over, the less you need to talk, and do that kind of pitching. Because we all get in that pitching mood, talking. And the more you talk, the more you might lose your way somewhere. Just by doing it, you lose the way. And if you lose your way, if you lose your red line, the circle doesn't close, and you might not be able to properly transfer the value proposition you have in mind. You have it, you understood it, you knew it, you know your markets. It's also about transferring it. So leave it to a pre-read in a properly full-fledged info memo, and then do it short during your pitch. And yes, a short video pitch is really great, because then technical experts who might join the investor committee at a later stage, that's typically something like that. You know, if you run into a due diligence, you call technical experts from that industry to join, to bring them up and running. It's very good if you have these videos on hand that they can pre-brief themselves and then start level heads into the Q&As.
Thank you very much, Dr. Marek. You've said a lot and you've broken down a lot of these complex um, situations that any startup or founder might confront. And from what you've said, the info memo is a very vital document that needs to be prepared. And obviously, your presentation has to be well thought out, well paced, and quite informative without being too talkative. Thank you very much for that. Bandana, I'd like to follow up with you on this. There are a lot of vehicles out there right now for fundraising. You have the online fundraising, the Kickstarters, the IEOs and ICOs. You have various methods. The VCs are there, angel funds. Now, how would you, as an advisor, how would you come in and advise a company, not necessarily a startup, but any company, a startup included, to go about fundraising? Which of these vehicles do they use and why?
Okay, so see, what was happening was, I'll just go back way in time. When there was demonetization in India, many people didn't know how to use Paytm or digital payment platforms until they were forced to use because of demonetization. Eventually, what happened is they started using these platforms for digital payment. Similarly, last year when the lockdown started and heavy lockdown started because of COVID, many people didn't know how to use platforms like Zoom. Though they had heard about Zoom, but they never really wanted to get into it until they got forced to use it. So, similarly, you look at StreamYard. Now, StreamYard is in there. If you remember the first time we all were on StreamYard and we had to cancel the show because no, none of us actually were getting the hang of it. So, when human beings are forced to do something, they automatically switch and they adapt themselves and they, start doing things. But I think it's very important to be progressive and adapt to new technologies, be open to come on these platforms, be open to fully get digitalized if need be during lockdowns, find a way and be more progressive and proactive to learn new things. I think that is one way that one can easily get success. The second thing is, the kind of technologies that are coming in nowadays are agri-tech, fintech, edutech, deep tech, health tech, food tech. These are the kind of technologies and startups that are getting funded. The reason being, firstly, they are technology based, and a lot of it is to do with digital platforms. So I think that is selling more these days to the investors. And in order to get funded, one needs to reach to the right kind of people. They could reach out to the right kind of investment bankers because it's also somewhere to do with relationships. If you have a good relationship with the fund, you can easily get funded. Before we used to go for breakfast meets, dinner meets, tea meets to convert deals. Now we can do it very well over Zoom calls, over platforms like these and connect with each other globally. I remember initially in a day I could only do 4 to 5 meetings. Now I'm able to do 16 to 17 meetings in a day, because I'm working from home nowadays, and just by sitting at home, I can do a lot of work and also convert a lot of work. So I think it's all, how we change our mindsets and how we transform ourselves and, start doing things. I think that will also help us and reaching out definitely to the right people. The steps to pitch deck, Dr. Marin really explained well. So I think pitch deck is also an important part, very, very important part of getting investments. It's an important document, and and if possible, one should invest in it and get it done by a professional. Naturally, the CEOs and co-founders feel they know everything, but somewhere they don't have the skills to prepare the right kind of pitch deck as well. So, these are my thoughts.
Thank you very much, Vandana. And interesting thoughts you had there, because I'm going to point out in a bit how how they are actually trending. These factors you mentioned are trending in the year 2021. But I just want to take time out to encourage all our if you're watching us wherever, on Facebook, Twitter, LinkedIn, and YouTube, you can be part of this show. You can drop your questions, and I'll be able to give you feedback. And I welcome those questions and give live feedback. And also, if you're a startup and you're looking for access to Bandana and Dr. Marin, you can do that easily by reaching out to us at the LATOKEN team, or follow them and connect with them on their social media on LinkedIn, which I'm sure they'll be giving you by the end of today's show. We are coming towards the very end of today's show, and before we go, I'd like to read out something I got just before we started the show. The fundraising trends in 2021 will have these features: emphasis on mobile giving, appeal to younger donors, corporate partnerships will be revisited, and AI-powered solutions. Now, I know that this might not factor into the corporate setup like startups, but what do you think about these trends, and how can one leverage on them going forward? Like you mentioned, Badana, going digital is vital for any startup that is going to survive in the coming years. And then their penchant for media, either digital media, audio visuals, and all that is also important, you know. So, I mean, going forward, the average startup, what do you think about these trends and how they have to adapt in the coming years? Um, Vandana.
So the thing is that you mentioned giving handphones to youngsters. Last year, when I would just like to share an example. Last year, when the lockdown started, my daughter started working for a cake company. Their revenue was zero. She made their Facebook page, Instagram page. She made their website, and their revenues became three times more. That's when she started doing my website, my digital pages, and my other graphic stuffs as well. So I think if youngsters are encouraged and educated to use technology in the right manner, they do put their energies into the right direction and they can get productive. Though for the school kids, there has been a lot of loss in the past 2 years. Continuous lockdown of school for 2 years and not having that environment. But digitally also, they have learned a lot new many things. And in fact, I feel they have much more time in hand to do their tasks because initially what would happen is that 1 hour before going to school, that preparation time, running around, getting ready, running behind the school bus, then if I'm not at home, I'm worrying all the time whether the school bus has dropped them, and then after that they are so tired that they don't want to do their homework, etc. I think now that tiredness that of going here there, and that stress of so many other things, having the uniform in order, packing their tiffins, running after the school bus, that stress has stopped. So I think because the school timings also have changed, they are shorter timings. They are concentrating in the class very well in the digital class, and I think they have become more better in studies that way. And by and by, people will adapt this, studying online. That will really help many youngsters. So my children, I can only say for my children because I'm seeing this. They help me with my work also. They help. They're also doing their studies also simultaneously. So it's a combination of both. And for startups, they need to get digital. They need to make their LinkedIn very very professional and enhance it. This is the time to go on LinkedIn, go on all the digital platforms. Connect with people, connect with the right people, enhance their Facebook, enhance their websites. I think this will really help them to get good work, and this will, help all the startups to connect with the right people. I mean, I've also changed my LinkedIn several times. If your LinkedIn is in order, I think you get a lot of work. So these factors need to be taken into consideration when we approach people and for startups that who want to go digital. If I got the question right, I guess. I hope I've answered it.
I think Natalia is frozen. I'd like to add something. I think we all need to think mobile first.
Yes.
So if you tailor your social presence,
yes, I mean, yes. I actually picked out a lot that startups can take advantage of when it comes to preparing their presence for the.
Dr. Marin was speaking about that while you froze. Yeah.
yeah, I'll just keep continuing my thought. Prepare all your social media, and I don't need to tell that to many startups because they're very mobile, close to mobile devices. Prepare mobile first. Think wisely what platforms you want to use for your branding, for your marketing, and for your lead generation. The more you are into a B2B sector, the more you should have a professional appearance on LinkedIn. Yes, it's the tool where you need to be. What doesn't work so well on LinkedIn actually is corporate posts. What works well on LinkedIn is personal posts. So it's actually the personal profiles of the leadership team that need to be well managed. That's one thought I have in this aspect. Secondly, it's more a challenge for more major companies to go mobile because they have their ledger IT systems, they have certain structures, and the younger generation is only mobile first, mobile everything. So having said that, I think we've already done that exercise for our firm. Everything is mobile, everything is connected. It's easy to switch from one device, maybe smartphone to tablet to laptop, wherever you want to work, on whatever device you want to work. It's not only about customer experience, it's also a lot about employee experience. And I think you should think wisely about also your employee experience. If there's always the problem with the devices, that's making your team upset to demotivated. So I think what works well in startups and can also work very well for larger corporations is that's what we are doing. We give a budget to the team, and then the team decides what devices they buy. So if there's one team member who needs maybe a very powerful PC or laptop for coding, then this person has the device of her or his choice. And the others then have other devices. And certainly we also let everybody use their devices privately. So we are not blocking them off. Those employees who work on governance topics and security relevant topics, they do only have a Citrix view. So they actually only see what they're supposed to see. So that's how we work with that. And that would be my advice. Don't overthink it. If you are a startup, focus on your employee well-being. And there are a lot of mentors out there who are sharing their leadership experience and a couple of clues and keys to do that successfully. I think Nathaniel is again frozen.
Yes, he's frozen.
Thank you very much, Dr. Marin, and apologies for the breakup. And I wish we could continue, if not for the interruptions. But as we come to the end of the show now, are there any parting words from you, Dr. Marin, before we go over to Vandana?
My closing remark would be reach out to help and also be open to your question marks, articulate them, and don't make up a story. You know, any investor is doing a lot of background checks. Background checks on your social profiles. And I'm not talking about photos of a party on Facebook. That's not the issue. It's about consistency of information. And you wouldn't believe how much kind of inconsistency we are discovering on a daily basis. You know, in a pitch deck, there is a team of, this is the leadership team, leadership team, leadership team. Then they have advisor A, B, C, D. And then if you check the social profiles and do some background checks, it looks a little different. So stick to the one truth. There is only one truth. Don't make up a story is my closing remark, because it will fire back to you one day or not.
Thank you very much, Vandana.
Firstly, I would tell all the audience here to read the book Power of the Subconscious Mind. It is very important to be in the center of the mind when we are in the entrepreneurship journey, and keep the mind healthy, then the body will automatically be healthy. I also want to, pass this message that do things in the right manner, in the authentic way, like Dr. Marin also suggested the same. And I think there is ample work out there, whether you go digital, whether you go physical. It's just that you should have the drive for it, and stay strong, stay happy, stay healthy wherever you are at these time, and stay use your digital platforms all the time at this point of time to get connected with the right kind of people, to get the right kind of work, and stay safe. Reach out to me on LinkedIn and my website, and stay happy always.
Thank you very much, guys. You guys have been kind and wonderful on today's session. We've come to the end of today's session, and I really hope that the next time we get to meet, we'll have another interesting topic at a better, more interesting time. Until next time, thank you for coming and attending today's show. And to our audience, stay tuned. The rest of the day, we have other shows coming up on VCTV. Until then, have a great day and see you. Bye bye.